Hi, everyone. Let's have a great week. Everyone with me? Let's have a great week. None of this. I hope this one works. Okay? If that's in your head, take a week off. Hi, Brock, Abraham. Okay, a few observations I want to share. As you can see, yields are about to push to new lows right here. Everyone see it, not that far away. Yeah, maybe it could hold and rally from here, put in a higher low, but looks like, we have destiny for perhaps new all-time lows in 10-year, which is back here. Okay. At this 132 level. So about 20 basis points away. This would be a great buy if it holds here. Anyway, what the point I want to make is with yields about to scrape new lows, how well USD yen is holding up. Okay, so the yen bottomed here August 26th, and then here was September 3rd. Keep that in your head. And yield bottom September 3rd. So for, more than 78.6 back on the verge of making new lows, my observation is US dollar yen is holding up quite well. Okay, so I'm stalking it for a buy sometime this week. I'd like to see if yields make new lows. I have some levels around 106 to try it. Of course, I'm wrong under this low. One of the guys I work with, trade with, pointed out this could end up being some type of ascending triangle. So we don't have, I'll just guesstimate where the uptrend may come in. Let's say it's like this. Okay, around the 106 level. And you have a flat top at 108.50. We did not take out this high last week when it turned. So a breakout over 108.50, as Blake would say, would really squeeze shorts. I mean, the formation measures to 112 up here, but I would look for maybe at least equality, which was 400 pips. So we bottom at 106, 110 is viable. So everyone with me on that? Relative strength, US dollar yen over yields. Okay, I was looking at euro pound. We held that 61.8 here. And it's been a pretty weak rally, but I think there's more left. If we rallied to between 90 and 91, I think this could be a failing rally or a 2 or a B. Waiting for that, doing a lot of waiting. And I did want to talk about crude because, the S&Ps, I don't have any confidence after last week in my technicals because, okay, I could handle a false breakdown here and turning, but I thought this 29, 35, 40 area was real important. And for it to just blow right through it, close above it on the NFP, gives me pause. I'm starting to think, and now it'll probably collapse, that we have one more rally in risk to new highs, which was Blake's call down here when Steve and I were freaking everyone out on investing.com down here, thinking we were going to have a breakdown, but that we could get one more rally risk on, right? Which would include a rally in US dollar yen and also a failing rally in crude, another secondary rally. Maybe we get back to 58 or so on this. 57, 58. So a blow off in S&Ps, 110 US dollar yen, and failing rally in crude are some of my thoughts coming into today. Plus euro pound, I'm not going to short it here. This pretty weak rally so far, but if the dollar follows through, and like today, you have euro up 14 and pound down 8, which is positive euro pound and dollar weakness. If by any chance you get some type of, I don't know if it's going to happen now, I came in wanting to buy a break around 109.40 to 109.20. Maybe it's not going to happen. So I have a new guest for us today, Charlie Garcia from Colombia. No, it's not Al Pacino from Scarface. This guy trades currencies, not powder. So stick around for that. And want to welcome everyone who took advantage of our promo. And if you didn't, you could still check us out for $1. All right. I wonder what the team is up to. Okay. So there are only a couple active patterns in play. Andre is bearish $1 up here. Okay. And Blaker is trying to bottom pick Kiwi. All right. So you get these pattern in plays plus all you guys know. Greg did the week ahead video. I'm going to have to stay after school. I didn't watch it. Who watches it? Who watched Greg this week? I know people tweeted it to me. Yeah, Rich? What's Greg? Okay, I'm going to quiz you. Jane, oh, okay. What's Greg's highest conviction call from the video? And what a nice free thing to give people every week that Blake and Greg and Steve do. You know, preps you for the week the night before so you could think about things all day before, you know, they open the gates and the horses start running. Okay, you guys don't want to share with me his highest conviction? Gold may have bottomed. Okay. Stay away from the euro. Okay, what else? Sign up for ForexAnalytix. Did he show that chart? It's parabolic to the upside. All right. Well, good. I'm glad you guys are using a great content asset that we provide every week, along with Face. And don't forget the chart of the day in the blog, too. How are you today, Blake? I saw you on the road.
Oh, yeah. Hey, good morning, Coach. How you doing?
Hi. Good, buddy.
So I took the infamous, I-10. You know that. I know you know that road. It's like I know it like the back of my hand. You know, I was talking to my son. We left after school on Friday, and we got to we got to LA, and it was Los Angeles County dragon boat competition. So we got there like 10:30, and then we did the festival and the competition, but we had a wake up call at like 4:45, and then got to the dam, Santa Fe Dam, which is do you know where that's at?
No, I don't.
You should check it out. It's I know it's a little north of where you're at, but it's a really nice lake.
National park.
Yeah, it's a big lake park
reserve.
It's a reserve, and it's nice. and it's up in Irwindale, California, which is, like Los Angeles County.
Yeah.
And yeah, so we did the all day competition and then dinner, and then got up at 4:30 yesterday morning and drove back. So
Fun.
yeah, not so much for driving.
Yeah, I know.
But I was telling my son, I was telling him, I think I've taken that to I-10 probably close to 100 times. If I had to guess, I would say I've taken that trip about 100 times. And because when I was in the Marine Corps, I would take either the 10 or the 8, depending on what I was feeling and depending on where I was going, every other weekend. So every other weekend I drove home.
Can I say something to our crowd? It's I know everyone's here because we all want to make money and trade to make money, but just listening to Blake talk about that, and sure it was a hassle for a round trip, but let me coach you. Fill up your memory box with things like Blake did this weekend that he'll look back on, and it's really probably the most important and best trade you ever make is to fill up your memory box with things like that, so that you didn't just exist, you lived. So
that's interesting, and we can talk about this, Coach, while it's a little slow. And we have a lot that we're waiting for this week, but my son is like a lot of kids. He's 15. He likes his phone and is being on YouTube and games and stuff. And I forced him to spend a lot of time with me, driving, talking. And we were out at dinner, and he noticed that I talk to everybody that's the whole team, and introducing myself because we're relatively new to the team, and so I'm making sure that everybody knows who we are, and type of thing, and talking about experiences, and I said, when you look back on life, I'm not going to remember the time I traded the euro. Maybe there's a couple trades out there that I'd actually remember, but I'm not going to say I'm
unremember.
Right. Yeah, those are probably the ones. Those are the ones I'm going to unremember that I can remember. But I'm not going to remember the mundane, day-to-day stuff. What I'm going to remember, and what my kids are going to remember, are the experiences. So I tried to explain to them, how important it is to, create memories by not watching YouTube or playing some game, but engaging in conversation with people and traveling, and and that's what really is when you step back at the end of the day, at the end of your life cycle, and you look back and you go, you're going to remember all those times and those experiences, and and I tried to really hit that home because I spend hours in front of the computer just like you guys, and I'm not going to remember any of it. I'm going to remember, though, my sister's wedding, or this weekend, or my wife and I going to wherever, or those are the things that are going to, like you said, fill up your memory box. And it's so important that you take the time to do those things, and
because they're there when you need to tap into it when you're going through adversity.
Yes.
Okay.
Yeah. And
really, it's like
more than anybody.
Like a spare tire, so anyway, that's the end of my sappy stuff for the week. I'm sure Stelios could follow it up with more sappy stuff.
You guys are some sappy people.
Yeah.
I don't get it, man. I don't know. I'm just kidding.
I am. I just
you're
a marshmallow. Anyway, so what are we going to do this week?
Well, I'm telling you what I'm going to do is I'm taking another trip. My last trip of the year. I'll be gone for the remainder of the week. Today was my only day here, and then my wife and I are taking a little trip. My kids are off for the week, so we're all leaving. And I got
fill up the memory box.
You fill up the memory box. I've got
overflowing, bro. Good
I've got people staying at my house, and I've got it all coordinated. It's great, So we're on our way out. But let me tell you what is up for the week. We have the big China U.S. Meeting that's happening over the weekend, or on Thursday and Friday. So that's a big deal. And and obviously, if you didn't catch it over the weekend, there was a news story that came out that China is not so, Bloomberg actually reported uh, uh, that there's talks that the U.S. and China possibly they're making progress on a mini deal, but it came out like with a pretty negative slant, like China wasn't willing to negotiate on a broad restructuring of some of the industrial policies and government subsidies, and everybody's like, "Oh, wow, that's bad." And so the market gapped lower, which we're still lower, but what the but after I started getting, if you wonder why everything kind of filled the gap, like I'll give you an example. You got the Aussie yen, we gapped lower over the weekend, and then everything started to rally back, is because everybody's thinking, well, wait a second, we still might actually we're going to get like maybe a mini deal, which is better than even a truce. Yeah, they're not going to bend on certain things, and frankly, if you're in China's position, right, and you're thinking from the point of view of China, it's like, oh, Donald Trump is in a corner. He's pushed into a corner here. Let's keep the pressure on. Because the question is, will China even have to deal with Trump in 10 or 11 months, or in a year from now? And that's their question, right? Do we just hold out and let him keep putting himself in a corner here, and then I'll just deal with the incoming administration, or do I or don't I, or is he going to actually be able to eke out another win, and then we have to deal with them anyway. But I think that's where China's at. But it sounds to me that they still want to put together some sort of deal, and so we might still get that going into the end of the week. We have a major delegation that's coming in, and major talks that are happening towards the end of the week. So I think we're going to have still a much better viewpoint of what's happening in with China by Friday, Saturday this weekend. So but up until then, it is a fairly quiet week. We got FOMC minutes, we have ECB minutes, and I'm going to tell you, I'm watching Greg's video actually after we're done here. I couldn't watch it yesterday. I got home relatively early, but family came in like as soon as I got home. Actually, as soon as I took my nap, I had to take a nap after a long drive. They came in, and they were here all evening, and I didn't get a chance to do anything. So here I am this morning, kind of, reading what I can, as I'm getting prepared for the week. And I'm not doing a lot this week personally, but I think that's what we're preparing for. One of the other things that I need to point out is just what Dale was talking about regarding the yen. The yen is trading, it's still trading heavy. I want to say heavy because we're below 107, but frankly, if we get above 107.10, we're going to squeeze. The market's still short. I think the market's short here from last week. They, shorted below 107, and I think people are now very cognizant of the fact that if we break back above this 107, 10, 107.15, it's going to squeeze the market a bit. The flip side is that we are still trading heavy. There's some options that are expiring around the 107 level, so we've got to pay attention to that today. But overall, I think the risk could still be to the upside. I think a lot of people were expecting this double top to play out, and I'm not so sure. I'm not sure it's going to, especially with stocks as strong as they are. Look at the S&P this morning. We had this really key reversal on Friday, and and I think some of you had mentioned in Greg's video, he's expecting another move higher in the S&P, and the S&P does look constructive. I have to, say once again that we are making higher lows. We are still making consistent highs, which in all actuality, this is, and I guess I can get rid of this little zone here. Let's just get rid of that for a moment, and let me get rid of this pink line. We're in essence still making a bullish wedge, right? Consistent highs, higher lows. I wouldn't be surprised if the S&P hits, makes new highs here, and if it does, what happens to the dollar yen? Well, the dollar yen's probably back at 108, if not, higher. And like Coach was just saying, so I think the risk is that we continue to grind up. Now, how much higher do we go? I think upside is fairly limited, depending, and I'll say it again, it's depending on the outcome of this weekend, of Thursday, Friday, and maybe even Saturday. It really depends on that. And I wish I had a crystal ball and I could tell you exactly what's going to happen between the China and U.S. negotiations, but obviously I don't. And I think the nature of the deal, if there is a deal, there is going to dictate how far we go up, and if there is no deal, then that's going to dictate how far we go down, which will probably be closer to 2,500 in the S&P. That is still a very big possibility, because we are let's all acknowledge the fact that we are dealing with Donald Trump, and as I've mentioned to you last week, if you put him in a corner, he tends to double down. He tends to, say, you know what, let's just make it work. Let's squeeze him even further. And that can happen. So, I'm not convinced that the market's going a lot higher from here, but I am very much, torn at this moment before we head lower or we head higher. And I think, like I said, it's all going to have to do with this week. A couple other things that are, happening is you got the euro. The euro looks pretty strong. We're knocking our head up against 110. And if you look at like an intraday chart of the euro dollar, this is, we're knocking our head up against this resistance, and a move above 110.20, puts us back at 111 and change. So the euro looks relatively strong. The pound's holding up well. It's not really selling off. It isn't going up, but it isn't selling off either. And that's something to be aware of. So the dollar, I still think looks at a little bit risk here against some of these European currencies. And if they go up, then it's going to drag the Aussie and the Kiwi higher probably as well. I will acknowledge that the Kiwi and the Aussie are both trading heavy today. So, we expected the Aussie, once it broke this trend line, to make some gains. It did. And let me remove that because that was drawn from sometime last week. But the Aussie still, you take this trend line here. Yeah, I think we can back it up maybe all the way back to 67.20, 67.15, and give back half of these gains here, retest this trend line down here, and it still looks relatively constructive. So it is trading a little heavy, which, take it for what it is or what it's worth. It might be, just suggesting that that maybe things in the U.S. China land is not all that great, but it is trading a little heavy, and so is the Kiwi. The Kiwi is came back below 67 cents or 63 cents, excuse me. I'm still trading the New Zealand yen on the long side, so that's my proxy to this New Zealand dollar. So again, kind of quiet today, but we're waiting for the end of this week to give us some better indications of what we should expect moving forward. I really hope that we have some definitive answers after Friday. I really, really hope that it's either there is some sort of China deal or there's just no deal. And if there's no deal, we can trade it appropriately. Obviously that's not going to do me any good. And it's not going to do me any favors being long New Zealand yen. We have no deal and I'm getting stopped out. I mean, I know where my stop's at. So I know my risk. And, but if there is a deal, knowing what the deal is and, what the scope of it is great, because then we can trade off that. But we might be in a little bit of a holding pattern for a lot of this week. I am talking to some of the guys in my office and they're like, man, if things haven't moved by one, I'm leaving. There's a lot of that talk going on. So I welcome comments from Steve Stelios and Coach.
Hey, Blake.
Hey, good morning, how's it going?
Good morning. listening to a billionth review of the Chinese situation, because we've been stuck at the same again and again in Brexit and China's deal. Since it came with your voice, I couldn't stop listening to in my head to you telling that joke that you were mostly using in the Morning Edge with the carrot and the donkey. You remember that?
Oh yeah, yeah.
Huh?
Come on,
Come on,
donkey, donkey.
Here's your cat. Yeah. So I'm really more or less convinced that this US-Chinese deal is in essence the carrot that is leading. Now, will it actually fulfill its purpose and lead it higher? Will it fail and never manifest? Doesn't really matter, but that's going to lead the market to one last lead higher, which I think is going to be the wrong move for people to chase.
Yeah, I've always been in that camp, and you've heard me for at least a year, Steve. At least a year. A China deal gets announced, let it play out for a couple of days, and then I'm selling the heck out of risk. I mean, that's just because the bottom line is, once something is announced, the fact of the matter is the global economy is slowing, and that's a fact, right?
Exactly.
Will it help us for a quarter? Maybe, but I think that the overall growth is slowing. So any push higher in equities, I believe, will be a failed rally attempt. And so, yes, I agree with your analysis. Now, the question is, who's holding the carrot? Right? Who's holding the carrot at this point? So, I believe China is, but we'll see, I guess, with all that. And is Stelios here this morning? I don't even know if he's here today.
Yeah, he is.
Oh yeah. Hey, Stelios, are you here? Well, maybe not. Maybe he isn't. So, Coach, what do you think?
He is. He didn't say he won't be. I mean, I see him in the panelist list.
Yeah. Well, he's the producer today, so maybe he can't multitask.
Maybe. Yeah, that might be it.
Yeah. After last week's action in the S&Ps, and I look at that double top, I would like to see shorts taken out, because I think we had every chance in the world to break down last week, and we didn't. And maybe, just to clean out all the bears, we need to take out that 30-20 level.
Wouldn't you just love to see I would love to see a blow off top. Could we please? I mean, and like this, I mean, if I have to exaggerate, I'll exaggerate a little bit. Couldn't we just get a move to like 3,400 and right back down again?
Maybe
God, that
32 would be enough. I knew a lot of guys talking about 3,200 Ellioticians, Blake, from 4 years ago was their ultimate target.
Really?
Yeah, and you could almost measure it taking a look at different formations and fibs. That 3,200 is viable. It's possible.
Coach, without seeing your face, I assume that your microphone is not in the right position, right?
Okay, yeah, you were right. You're like Kreskin. Telepathic.
Yeah, that's good. That's good. Right. Yeah, Steve's good like that.
Yeah.
But yeah, I mean, if it's 3,200, maybe even we blast past it, I would just love to see some sort of blowout move. I mean, blow off tops and people use, blow off top, the terminology way too often.
Yeah, they don't happen very often.
They don't. I mean, I've seen them maybe, those types of, what's the proper term?
Parabolic move, like
parabolic, or if it's to the downside, it's like a capitulation type of move. It'd be the blow off top is the exact opposite.
Euphoria.
Of capitulation. Some sort of euphoric move, whether it's upside or downside. I've seen them maybe 5 times in my career in 20 some odd years. And
do you count January 2018? Because I do think it was.
No.
If you think about it, the preceding price action and the following days that brought us from like 28, 70, whatever it was. Yeah.
No, I don't. And do you know? And Coach, you can probably confirm this, and especially if you're looking at some sort of dealing platform, when you get blow off tops or capitulation type of moves, you get cross markets. Like the market is moving so fast, the bids outpace the offers in a squeeze. Like if we got a blow off top higher, like let's say you would see dollar yen bid 107.50, offers at 107.20. That's a crossed up move, right? Or the other way, you know, if you get a capitulation, you've got offers that are way below the current bid, because what's happening is it's moving so fast that desks can't adjust their prices, and you're seeing massive volume come through. And whenever you start seeing cross markets, it is a really, to me, it's always been a sure sign that, okay, we're getting really close. Like it's like I'm within 15 minutes of a, you know, reversal here.
You know, I see what Steve is saying, and sentiment wise, Steve, I think you were right. But you know, see how it grinded up before it sold off? Blow off tops usually
it's a lot zoomed out. That's why it looks grinded, because I remind you when we were back then, and after a big move higher, we had that last leg higher, which was even more parabolic than the previous ones. Yeah, I mean, it didn't end up being a blow off top. In what sense? We had like several days of very weak price action following that. But we never got follow through. So yes, but
I'm just saying blow-offs would normally be like, you know, 4, 5, 6, 7, 8 days in the same direction, vertical in that direction. Do you know what I mean?
Or you get a you know, 4 or 5% move higher intraday, so, and then by the end of the day you end lower, and that's
2% lower. Yeah,
those are the types of moves that it's like, okay, you just blew out everybody. And it's the same on the downside. If you see like a 10% move lower, but we end up the day by like 2%, and it's like, okay, that just knocked everybody out. And it's usually accompanied by cross markets. Are our systems good enough to not cross markets anymore? I still don't think so. I don't think that technology
they're worse.
I think,
at least you had human beings to come into the middle. Now we have no one.
Right. Yeah, it's a great point. So, anyway, that's what I'm looking for. I'm just hoping for. I just really hope and anybody who's short, I'm sorry if I'm telling you this right now and you're like, oh crap, I'm short. And it's like, oh my God, how about if I get blown out? But I mean, that's a reality, right? It's a reality. It could happen. I mean, and I'm hoping it does, because when we see a blow off top or a capitulation, if it's, you know, lower, it really marks the turn, and then we can decisively trade from that. And that's all, you know, as a trader I look for is, you know, I decisively make a decision, you know, and not question it, not second guess it. So, you know, maybe we get it. You know, the end of this week, beginning of next week, and you know, we get some blow off top, you know, China-US trade deal, and marks the top, and we can all go, okay, now it's risk off from here on out. You know, nothing's getting better. It's only going to, you know, whatever. I'm just speculating. Well, I've been speculating this whole time. So,
I mean,
but anyway,
keep in mind the market has already reached the point that it's even ignoring QE. I mean, I don't know. Have you been watching the Fed's balance sheet, Blake?
Why, it's blowing up?
The Fed's balance sheet has increased 180 billion in 3 weeks.
That's nothing.
I want to remind you that QE3, the open-ended QE, which was like the largest one we had, was for 85 billion per month. And we've had the balance sheet increase by 180 billion in 3 weeks, supposedly under no QE.
Because of the repo market.
Yes,
but they
have it doesn't matter because it's the same thing. They're still monetizing debt in essence, right? The only difference is that the maturities are shorter. That's the truth. But let me say it otherwise. Do you believe that the Fed is going to let those mature and the balance sheet is going to go back? I say no chance. No chance. So in essence, it took them how many months to bring the balance sheet from like 4.3, 4.4 trillion to a little bit more than 3.7, and we're almost back at 4 trillion within 3 weeks.
It's amazing. So
Yeah, they're in a jam.
they are.
I mean, why is this happening in the repo market? Why do they have to keep pouring all this money up in there so there's not disorder in the overnight banks? These are just banks trading with each other. Why can't they get, roll over the debt?
Because price discovery has even surpassed temporarily the ability of the Fed to control rates. That's why.
Yeah, okay.
And they're trying to force it to come back to the overnight rate that they want. But, when you get to the point that you need to throw in the market 180, 190 billion in 3 weeks to achieve that, that's a big warning sign.
I agree, man.
So
I've never seen it happen, Blake.
I've
been around, like you say, for a long time.
Yeah.
I've never seen this happen in an overnight market like this.
This repo market, yeah, it's
weird.
We're coming to a head, and let's hope we get some action this week. But I'm going to pass it over to you guys. I got to get over to the markets here. The office is
absolutely
my name. So
Blake, have a good
thank you. Hey,
have
you
a nice
guys.
day.
Yeah, you guys have a great week. And by the way, if you're a ForexAnalytix subscriber, you're going to still be getting, the analysis throughout the course of the week. Obviously, we got Phil and Paulie's going to be really helping out Steve throughout the course of the week. So, and remember, guys, if you haven't used, there's a couple things. First of all, if you don't use ForexAnalytix already, make sure that you check out our pricing, because we do have a light version which gives you the basic technical analysis, gives you access to the app. You don't have the chat room, but still you have our technology and see what it's all about. And it's great just to get, even if it's just my view throughout the course of the week, because I post, not this week coming up, obviously, because I'll be traveling, but 90% of the time I'm uploading all of the basic technical analysis in the evenings, and throughout the course of the day, it's myself and Amanda and Paul and Steve and and some other team members post there too. But make sure you take advantage of it. It's only $19 a month. And also, if and we haven't mentioned them in a while because we were busy with our offer, our seasonal offer. But guys, if you're looking for a broker, make sure you visit Forest Park FX, because they are our webinar sponsors, but not because of that, because they're really great in finding you a broker that best suits your needs. And that's equally as important with the analysis that you bring in, is where you're dealing at. And if you want to try to get ForexAnalytix for free, you can join the reimbursement program if you're not in North America. So if you're in Europe or Asia or somewhere else outside of the United States, you can be involved in our reimbursement program. So you can contact them directly right here on their email or Skype. So make sure Forest Park FX is awesome. They really, Steve is actually a client of theirs too. So
I am, and unfortunately, due to being busy, it took me some time to go through the very simple process, and I'm hitting myself in the head because I'm getting
rebate
cashback every month.
Yeah, and you're like, man, I can't believe that. All right, guys. Well, thank you, and have a great week, and good luck this week. And I'll be back on Monday next week for sure. Okay.
Thank you, Blake.
Thanks, guys.
Enjoy, Blake.
Thanks, Coach.
So, Steve,
hey, Dave.
you know how we make it easy for people to remember we have a new product? ForexAnalytix says,
oh yeah,
let there be light.
Let there be light. Yeah.
So light is there, guys. Check it out.
By the way, even people that are going to start the trial on light, they will get the first 10 days access to the full set of our services, so they can actually see how the premium is as well.
Nice.
So they can have an idea. Yeah, and it's just $1 for a 10-day trial. Okay, no matter which plan you choose to continue afterwards, and you can cancel it whenever you want. Now,
I'll gladly pay you Tuesday for a hamburger today. Who said that? Do you know?
No, I have no idea.
Wimpy Burgers.
Wimpy?
Yeah, he was a
Okay.
Yeah, you were in diapers probably. All right. Anyway, go ahead, man.
Money's time value in a sentence. Yeah.
Yeah.
Coach, any requests for a specific market?
What are you thinking in US dollar yen with yields almost at new lows?
Yeah, yields are almost at new lows. US treasuries are equivalently almost to new highs. That is very, very true, although it is quite a strong resistance. Let me show you. I have a little bit of a different drawing from Blake here, which regardless is in essence advocating that his point of view that we might have another move higher is likely correct, because I drew this channel like this, and as you can see, we've now been retesting the broken channel's trendline resistance as support. At the same time, this exact same area is also horizontal support. So, yeah, I mean, I do see the appeal for somebody to try the long side here. Now, will it work? I have no idea, but it is definitely a technical confluence of supports. So I think 106.50, let's say, the low that we had on Thursday, quite an important low. Now, let's add to the mix, which gives us a very nice risk-reward opportunity, that so far today, we have an inside day to an inside day.
Yeah.
So, theory
you know what I
tells
would
us
love? Lower tomorrow.
Yeah, and then higher.
Yeah. Clean out even Thursday's lows and turn up.
Yeah,
That's
can
what
happen,
I'm looking for.
But definitely USD yen is currently on top of quite important support. That's why, whenever I draw two directions from a specific level, it means that, this level is very important and is going to be defining how we move from here. So I do think that we're in such an area in the USD yen, and not only in the USD yen, multiple pairs, because I was doing the weekend analysis, multiple pairs are on top of important supports or testing important resistances. So
you made a good point in WTI Friday when we were near the 51 area, that, the risk reward was good for a pop from major support in WTI.
It was because we were approaching the 50.5 area, which we know how important it is. So after such a move lower, I mean, this was a serious move lower. I mean, first we take out everybody that's short in the market, and then we move 19% lower, right? Within a couple of weeks. Within a couple of weeks, we moved 19% lower. I mean, this is not a move to joke about, right? So, very erratic price action, but I was more or less certain that it's not going to be easy after a 19% drop for the pair to slice through 50.5 just like that, without finding some kind of an initial reaction. So we made it to 51. We didn't exactly make it to 50.5, and now we are indeed seeing a pop. 54.50 roughly is an interesting area of resistance. I think we will probably at least make it there, and we see what happens from there. So, but keep in mind, we do remain in this broad consolidation. It is rather broad because it extends from 50.5, which is support, to 63. So it's like a $9 wide area, which is quite a lot. Now, in between that, personally, I'm not looking to do something. If we made it down to 50.5, I would have probably bought, but we didn't. Now, what happens in between, since we're seeing these volatile, erratic moves, I think I would rather let the market settle first, or produce a longer term breakout, either above 63 or below 50.5, in which case, in any of those cases, I do believe that the market is going to extend one way or another. Regardless, as I said, 54.50 is a resistance area, and I think it's a very high probability we're going to make it there. Now, having to do with gold and silver, unfortunately, I was very, very busy because we had an issue yesterday, Sunday, that we needed to solve. But gold and silver, I didn't watch Gregor's video, but so I don't know what he's thinking about it. But gold and silver, as I was saying last week, they have a decent chance of already having found a low. Now, what would I need to confirm such a scenario? I would need a breakout from the descending channels that have been guiding them lower in what seems so far to be a corrective move in both of them, right? Both gold and silver. So I have to say that I anyhow remained long-term bullish, both gold and silver. There's no question about it. I mean, with what we see, with the turn we see in monetary policy, I see no reason why gold is not going to follow its fate against other currencies, because keep in mind, a lot of people don't realize that. But gold is undeniably in a bull market because against the vast majority of the currencies, gold has moved to all-time highs, right? So this is gold against the euro, right? As you see, that was the all-time high against the euro in 2012. And as you see, we did move above that. And you can even more clearly see in this huge uptrend in gold against the euro that this move lower is corrective, because in essence, especially against the euro, this clearly looks, and in my opinion, is a bullish pennant, right? And if you have a look at gold against other currencies as well, like the Aussie, the Kiwi, you'll see that gold has already been trading to all-time highs against a lot of currencies. So I do believe that it is a matter of time for gold to be trading at all-time highs against the dollar as well. Now, I don't know if it's going to take like 2 months or 6 months or a year, but given the path of monetary insanity, I think that the dollar cannot possibly stay that strong for much, much longer. Now, of course, does this mean that I'm currently short the dollar? No, I'm not, because, the dollar chart hasn't been broken yet, right? I mean, technically speaking, we still remain in an uptrend, and I need to respect that. So as long as the dollar remains strong, gold still has some way to move to be at all-time highs above like 1910, whatever it was, against the dollar. But I do think that it is a matter of time, a few months, a year, 2 years, but I wouldn't say more than that. So gold and silver consolidating, correcting lower. Perhaps the correction is already over. How are we going to know that? As I said, a break above the descending channels. So in the case of silver, I would say a move above, let's say, $18 as we speak. Against gold, I would say a move above 15.20. That would indicate another leg higher and a higher high. Okay, so I do expect that in both cases, we're going to get a higher high following, the move above the corrective channel. Gold-silver ratio consolidating in the short term. It looks likely that we might get another pop towards the 61.8% fib at 88. But it is likely that we're going to see continuation lower following that. How can futures and Forex gap? Forex can only gap, by the way, since you're asking, Chris, Forex can only gap on a Sunday night, Sunday afternoon, depends on which area of the world you are. I mean, Forex opens here on Sunday night in Europe, so, Forex cannot gap, in any other situation. I mean, theoretically, it can also gap intraday but it's so rare. I mean, there has to be some kind of an event like the S&P abandoning the floor, something like that. I mean, there is no other type of event that can actually create a gap in such a liquid market as Forex. Now, stocks do tend to gap, and futures of indices, stocks, etc., quite more frequently. But it is what it is. That's how they can gap. When in essence price goes to a level without passing through the intermediate levels, because simply bid immediately moves from X to X plus or X minus or whatever, and there is no trading happening in the prices between the initial price and the price after the gap. So that's how something can gap. Who does those trades? What do you mean? Institutions, traders? I mean, let's say that you just got an announcement that, I mean, something completely unexpected. Let's say that you just got an announcement that nobody knew about it, but trade negotiations were ongoing, and now you get like a Bloomberg announcement that without anybody's expectations, US and China, let's say, went through with a deal. Everybody expected that it's going to happen later, but they didn't want to announce it. And they just produce a deal, boom, and you suddenly get a deal when nobody even expects that they're going to get one. Do you think that there's going to be anybody that's going to be leaving their orders in the S&P where it currently is? I mean, S&P is going to find itself from 29.45 to, I don't know, 29.80, something like that. Especially as you understand, that's even easier to happen if, let's say, you got an unexpected announcement on a Sunday before the market opens. Then everybody would pull their their orders out of the market, and you would suddenly see trading opening at a totally different area. Might be like 1% away, like 2% away. Who knows? Depends on how big the event, right? So that's what happens. I mean, when price does not depict anymore what the market expects because something fundamentally changed or something big happened, then you get gaps. Doubt the US-China deal is happening this year. I'm very skeptical myself as well. I think that the only way, I've said it before, I think the only way we're going to see a China-US deal is if Trump is willing to, in essence, water down his expectations by a lot. Now, would he be doing that? I think only if he were very desperate. There's
no guest today.
No guest today?
No, he says, I am far away in a travel.
Okay. Is that
you tell me what? I don't know what it is.
Drugs, perhaps. Who knows what kind of drugs?
Well, Colombia.
Yeah. Okay. Oh, yeah. I forgot about that. Actually, yes.
Anyway.
So there's a question about natural gas, and some time ago, that's what we drew here for natural gas. That I said that keep in mind that we might come down, retest this broken channel, and move higher from there. We didn't exactly make it to the channel. We weren't far away from it, to be honest.
Last time I am far away in travel. I think it's when I ate some magic mushrooms.
Son says, caught with the powder.
Anyway.
It reminds me, there is in National Geographic Channel, there is like a series.
Should I reschedule him? What do you think?
That, yeah, who knows? Ask him if we can get if we can get somebody with a camera in the prison cell.
You remember those cars? You're a car buff, right, Steve?
Yeah.
All right. Remember DeLoreans?
Of course.
Okay. Well, do you know how you know you're driving a DeLorean?
How?
It follows the white line on the highway.
You know, by the way,
That was his problem, huh?
There was a rich guy, actually, very recently, like a couple of years ago, that bought the DeLorean company, which was bankrupt, with the factory and all the spare parts that they had. They had already produced like enough spare parts to create another like 1,000 DeLoreans or something like that. And they're looking into reviving the DeLorean by making it more modern, let's say. So we might see DeLoreans once again driving the street. Who knows?
Yeah, I wonder it'll still follow the white line. Anyway, no interview, so you wrap it whenever you're ready, buddy.
Yeah, sure. Second, let me see what other questions we have. Oh, there's a question. Yeah, Dale, you're going to answer that.
What?
There's a question how our friend here, Rich, is asking what effect option expiry has on prices.
Okay. Well, options are like relationships. 90% of them expire worthless. Okay. And so the guys that take the other side when you buy a put or a call,
by the way, let me interrupt here because many people don't understand that because the retail crowd usually buys options.
Right. So it's
what
a guy
what many of them don't know is the vast majority of the institutional traders are underwriters of options. So they don't buy usually options. They're the ones underwriting the options.
Because they know about decay. And
yes,
right.
Exactly. So go ahead, coach.
So they normally so you're buying them from the house. Let's say the banks are the house. They're writing them.
Or the big trader, yeah. Or the funds, yeah.
Anyway, in options, you have to be right twice about direction and about when. And direction's tough enough. So if you
depends on if it's a European or a US option.
Oh yeah, that I don't know the difference. So why don't you finish? What's the difference between European and US?
One, you can only exercise at expiry. The other one you can exercise at any given point.
Is that European?
Yeah.
Oh wow. Huh. So that takes away a little bit of the advantage, doesn't it? For the underwriter?
Oh yeah, of course. That's why they're priced differently, as you understand. Yes.
Oh, okay. Huh. Interesting. So it's more of a stacked deck here in the US. Okay. All right. Well, anyway, so they have the ability, at first you'll go, how they do that, but wherever you see major open interest, the option writers will try and have the markets around expiration trade around that level so no one can collect premium except them. Is that a good explanation?
Exactly. Very frequently, it is much cheaper for them to defend the level so the option doesn't go in the money, so then they can collect the premium, than to actually not defend the level and let the market move in a price that as underwriters, they actually have to give back at least more than their premium. Okay. And by the way, I'm not sure what you said before, coach. Perhaps I answered oppositely. Did you say that Europeans can be exercised on expiry only or the opposite? So we don't misunderstand it.
You did. You said that Europeans, they can exercise at any time.
No, it's the opposite. Sorry, I didn't understand what you said. I just realized that perhaps you meant the opposite. No, it's the exact opposite. European options, you can only exercise at expiry.
Okay.
American options you can exercise at any given point.
Okay.
So
Anyway, I don't do much with them anymore. I'm cured. I'm cured.
I don't blame you. I'm not going to tell you that, you know, buying options is stupid, because it isn't. I mean, if you have a high conviction, buying out of the money options can be a very, very cheap way to get, you know, a position in the market that might move quite a lot and get you in the money. And you might buy options in that case, like very cheaply, and then end up making a lot of money. But to be honest, as a long-term tactic, it's not by accident. It's not a coincidence that the money is being made by collecting premium, right? The only problem is that you need to have deep pockets, because on occasion, you're not going to collect premium, and
you get steamrolled.
You're going to have to pay up, and you know, you need to have deep pockets. So on occasion, when you're the one that has to pay up, you can actually pay up without blowing up.
Like all the VIX products did a year ago,
exactly.
Right? People that were short volatility. Yeah.
Yeah, you remember that fund manager on YouTube video crying and explaining to his clients how they blew up.
And the ETFs that no longer existed after that. Yeah. Okay. Good lesson.
So let's see, do we have any other questions? The market is, natural gas here, we already said that. Keep in mind, we might bounce from here. I mean, the price is quite low. You see that, you know, we stop. Let me actually fib this. So we also see if there is some kind of a fib here. So if it's a confluence. So from here to there. Okay, yeah. We have a confluence with that channel on the 78.6 at 217, 218 actually. Let's see what happens from there. But I do think that prices are quite low, and looking at the divergences we have in the RSI, I think there is a decent risk reward to looking higher here in natural gas. More price action will be needed, but I think it's quite dangerous assuming that it's going to move much lower from here. At least that's what my intuition as well tells me. Stay with okay. Europound. Yeah, sure. Actually, let's cover Europound. Europound is quite interesting. Where is it? There it is. Okay, so Europound. I said a few days ago that Europound seems to be correcting higher, because, you know, this move higher so far looks very corrective in nature to me, and I'm still of the same opinion. 89.50, 0.8950 is resistance. I think that as long as we trade below it, there is a very decent chance that we're going to see at least one more leg to the downside. Euro USD, Blake already covered Euro USD, and I don't have much to add, but I can briefly show it to you again. We found support once again in this trend line, which is the, you know, this descending wedges long-term trend line. So that's support, and resistance is this intermittent in red that you see, descending trend line, which also confluences currently with the 61.8 of the last move, both of them at 110.24. That is resistance. I think that if we break above that area, we should get at least an extension towards 111.10, which is that previous high. Above that, we can then open the door for a retest of these larger ascending wedges, resistance at 112 something. Above that, kiss it goodbye. But of course, as you heard, several areas of resistance before we can claim that something bullish has actually started unfolding. Okay, now it's one thing to obviously admit that there is a, you know, there is a very slow downside momentum, and that is not what you would expect to see in a bear market. It looks like a very mature bear market. So to me, it still looks like it's a market that can actually end up squeezing short sellers in a really bad way. But jumping the gun without even having broken a single resistance area is exactly what I said. It's jumping the gun, right? I mean, you're assuming that that squeeze might start from here when it might start in a month from now, or from, in 2 months from now, right? So I'm pretty certain that we're going to get like a huge squeeze in the euro, in the pound, and in mostly everything against the dollar at some point. But there is no indication that this is the point. And if you want to look at it from the DXY perspective, for the DXY to start giving us signs that, it has stopped, initially it has to pass through this ascending trend line support, currently, let's say at 98.50. Then it has to cross the 97.70 area. Then it has to cross the 200 daily moving average. Then it has to cross this ascending channel. And then we can actually say that, okay, we've got all the confirmation we want. The dollar is finally moving lower. So depends on your risk profile. You might decide to go short the dollar just when we cross this first ascending trend line, as long as you know how to manage your risk, or you can, establish like a small position then and keep adding for every important support that we break. So this is one way to trade this potential move lower. Okay. Now, there are other people that have low risk tolerance, in which case they would be doing absolutely nothing until we finally broke through, the last, let's say, area of support that defines the uptrend, and then they would go in a full position. That has clearly to do with your trading preference, your trading style, your time horizon, your risk tolerance, you name it. So, I can't advise how you would trade that, because I can tell you how I would trade that. But if we don't agree on all the rest of the criteria, that is of no use to you, right? So let's see if we have any more questions. Euro USD, Euro Pound, convert those. Yeah, seems like that's it. Yeah. Okay. So we'll be back tomorrow. A very quiet day so far today. So it's not that we had much to say.
And tomorrow, and I know a lot of people in our community know this guy, but I guarantee you that he'll be here. That's Miad Kazravi from ZVX Trading, very popular guy in the FX community. So be there for him tomorrow, and turn around Tuesday, and thinking we'll have some things to fade over the next day or so. I just don't feel it today. So
yeah,
all right,
let's see. Often Mondays are very boring.
I'm with Greg on that. Most of the things I initiate on Monday, if I just waited for, because I'm kind of a reversal trader, Monday's usually a follow-through day from what happened late last week, and reversals can start to happen on turnaround Tuesday through Thursday. So I'm doing nothing today.
Let me just mention, Coach, because for some reason I forgot to mention that, which is quite important, because we didn't talk about risk. Keep in mind, I've been saying that again and again and again. So I'm pretty sure that people that have been on this webinar, even on occasion, during the past couple of weeks, they've heard it. I mean, we've had a big pop in the S&P, and whatever the S&P is going to do, more or less the rest of the indices are going to follow. And the S&P is getting very close to retesting the 2960 area this time as resistance.
That's your area.
Needless to say, that gives a great risk-reward opportunity to be short. It doesn't mean that it's going to work out.
Right.
But it means that retesting 2960 gives you a very decent risk-reward to be short, even if, that produces just like a short-term, like a 1-2 day reaction lower. So I do think that from current levels, trying up the short side is not a bad idea. But yes, be careful, because by the end of the week we might get some news having to do with the US-China deal, and it's like playing the roulette. I mean, if we get some positive news from that, you can see indices fly higher even if that proves to be, which most likely it's going to prove to be, a short-term hype. But you don't want to be in the wrong side of the market, if that happens.
Since we've been range bound in a huge range with lots of breaks and rallies, it's become more of a riverboat gambler's market. And the currencies, even though they have low volatility, are still better technical markets. The S&P, I think, demonstrated false breakdowns, everything within a 1 week or 2 week period. So it's really a tough trade comparatively to other instruments, in my view.
Yeah, but I think
rewarding though.
I think it's going to be extremely rewarding.
Yeah.
If you remain patient and you actually trade the breakout from the wedge, because because it's going to happen. There is no alternative to that. Now, nobody can tell you if it's going to happen this week or the next or in a month from now, but a wedge is a contracting formation, which means that inevitably at some point there is no more room and you get a breakout.
Or a throw over.
Yeah, or a throw over, yeah.
Yeah, it'll come out, or, sometimes the first move out of it's the fake out.
Yeah, although if it is a move lower in this case, I don't think it's going to be fake. It might prove to be fake if it's a pop, but if it breaks down, I think that a lot of people will follow this move, and that on its own is going to be enough to make it, real. Okay, Coach.
All right, buddy.
Thanks. We'll be back tomorrow.
All right. Everyone, remember, don't just count your pips, count your blessings. And we'll see you for Turnaround Tuesday. Thank you for being here and hanging out with us.
Bye-bye, Coach.
Bye-bye, Steve.